Welcome to this channel, Smart Money Concept. I want to explain that to you because it forms the basis of most good strategies. If you want to develop a good strategy, it is wise. I would advise that it is based on the smart money concept. You know, most people talk about the smart money concept as if it's something very complicated, but it's not. Even a 10-year-old child can understand it in a day. Even a day is a whole lot. It's very simple. The only thing that you have to know when you talk about the smart money concepts is three key terms. That is the bullish break of structure, the bearish break of structure, and the change of character. That's all. That's SMC as a whole. Now, what are these things? Okay, when price moves like this, let's say price is moving up and then you see price pulling back. As far as smart money concepts are concerned, once you see a reversal like this in price, it indicates that there is an important structure right there. Price is showing you an important structure such that once price comes back to close above this area where it reversed before, it is now called the bullish break of structure because price is breaking through this structure. That is the first key term, the bullish break of structure. Now, the bullish break of structure indicates that price is going to continue moving upward. Okay, if you trade this based on your strategy, you can take a buy right there. But I'm not teaching you any strategy because the smart money concepts or smart money concept is not a strategy. Instead, it is just the basis of a strategy. It only tells you if price is going to buy or price is going to sell. For you is to then identify your points of entry, point of stop loss, and the point of take profit. You have to identify those levels using other price action principles. For example, if you were to take the buy right here, maybe you would put your stop loss below this swing lower high, like that. That is what you have to add on top of the smart money concept. It forms the basis of trading strategies. Okay, this is the bullish break of structure. The opposite is true. If price is moving downward like this, and then you see price reversing, moving upwards, right here where it reversed, it shows that there is an important structure right there, such that if price comes back to then close below this level, I call them key levels in my strategy, such that when price close below this structure, it is called the bearish break of structure. That is the second key term. And this suggests that, remember, there is no certainty in Forex. It's all assumptions. Price can go anywhere, anytime. But as far as the smart money concepts are concerned, this suggests that price is likely to continue going bearish. Then based on your entry rules, you can then take a trade right there. But here is another important thing, which is the last term that I spoke about. Remember, the change of character. Now, for the change of character, when price moves like this, it creates higher highs, lower high. Remember, I said when it reverses, it shows that there is an important structure right there. Okay, price continues, bullish break of structure. there's another structure right there which price left on its way to the top. So when price reverses right here, it shows that there is a structure right there, and then when it reverses at the bottom, it shows that there's another structure right here, such that if price is to then come back and close below this structure, it is no longer a break of structure or bearish break of structure. It is now change of corrector. That is what they call the chalk. It's the change of corrector, such that, or let me say, it indicates that from here price is going to go very bearish. Price is going to sell like that. Now for you is to develop your own entry rules, based on your strategy. You can then wait for a retest of this structure. Okay, you can then sell. Remember, I said the smart money concept, in my opinion, is not a strategy. It forms the backbone of a strategy. For you, you have to build your strategy on top of it. Let's just look at some few examples. For you is to come on the markets and look at what I have been saying. So right here, price moved up and then it pulled back, and when it pulled back, it left this level, this structure right here, and then it returned down here. Down here it left another structure, and when it broke through this structure, remember the bullish break of structure, price came here, pulled back. When it pulled up again, remember what I said, the break of structure, and as you can see, price went bullish. Price pulled back again, and when it pushed up, break of structure again. Remember, this would be your buy entry, because as far as smart money concepts are concerned, whenever there is a break of structure, it suggests a continuation in price. Now right there, let me just highlight or make things clear. Price pushed up and then it pushed down. You also take account the wicks, and then price pushed up again, such that right here there was a bullish break of structure. Remember, there's also this structure which price left. Let me extend it. Now look at what price did. Instead of returning and pushing upward, it came back to close right below this structure, and this is now the chalk, the change of corrector. So yours is to have ways of how you are going to enter right at this point, because what this concept is only telling you is that price is going to go bearish. Remember what I said, that one of the things you can observe, let me just give you a clue. You can wait for a pullback. Someone else right away, when price breaks out, can just take the trade, put stop loss somewhere right there, and then take profit. But someone else who is more strict can wait for the retest of the structure right here, or let's say of this key level, and then after the retest or at the breakout of the retest, let me just do this, at the breakout of the retest, remember price is going to break out and then go back to retest, And then at the breakout of this retest, you can then take the trade, put your stop loss above the structure level, and then you take profit like that. Okay. And another thing that this concept helps us to do is to be able to see if price is going to reverse. Let's say I had taken a trade right here of a 1:3 like that, and as I watch this trade, I noticed that there is now the change of corrector. Remember, price was moving like this. Price pushed down, pushed up, pushed down, and when price closed below this, it was a bearish break of structure. But then price left this structure right here where it returned, such that if price is to close above this, it is going to be change of corrector, suggesting that price is now going to go bullish. So it is pointless to hold this trade once you see that price has closed above this level. That is where you take your profit right there. You take your partial profits, you close everything, and you look to buy. This happens on every time frame. Every time frame you will find this happening. That is smart money concept. It's not hard. It's not hard. Just take your time, watch this video again and again. It is going to open up your mind. It forms the basis of most powerful strategies. Thank you. Have a wonderful day.